Could this little-known luxury hotel investment trust be a diamond in the rough? Heavily underpriced due to COVID headwinds, AHT could be emerging strongly. With tourism on the rise and interest rates due to fall at some point, AHT presents an interesting opportunity to those looking to capitalize on future yields and the rise in the stock price. In this video, I present the technical and fundamental analysis for a price rise. Let's get into it.
Now you can see that between these two pieces of price action, there's actually quite a good degree of similarity with this downward movement, upward movement, downward movement, upward movement, making a W at the bottom there. We can see this downward movement, upward movement, downward movement, upward movement, making a W as well. Now I want to show another couple of little similarities that we've got. I'm not making a fractal here, just showing the sort of the dynamics, and I'm getting around to making a point with regards to earnings coming up very soon as well, because that's that line there shows you where the earnings are. After we did that W, there was a period where we consolidated just a little bit, just in there, just in here, and it kind of counted as a bull flag. Now, this here is happening, it's kind of a bit longer extended period of consolidation in this phase of price action. Is it a bull flag? Well, when you're looking at it on that time frame, it's a bit meh as a bull flag, but it's there, it exists as this after the key component that I'm talking about in terms of the double bottom as signified by the W. Okay. So I think, is everybody following along with me? Trying to show everybody something here. And what we're talking about then is, will these be positive, right? So obviously in terms of the analyst predictions, they're talking about a loss of 168 compared to last time. There was a loss of 175. The revenue was better by a chunk. So it was 300 million last time. This time looking at 300 million again. And what we know already is that things will be slightly better. So I wanted to show you this here so you don't have to take my word for it. This is Ashford Hospitality Trust announcing their preliminary first quarter earnings. That's for Q1 2023, which is where we are just now. Comparable rev growth for the quarter is expected to be approximately 30%. Company anticipates 60% of its hotels are now out of cash traps. So during this phase of price action, down to here, we had 79% of their hotels being in cash traps. Actually, kind of, it was quite sketchy. There was times when I think 90% of their hotels were in cash traps as well. So that number is lowered significantly. What we're seeing here is that the RevPAR, the revenue generated per for their hotel rooms, is going to come in at approximately $125. This comparable RevPAR reflects an approximate increase of 30% compared to the first quarter of 2022. Additionally, for the month of January 2023, comparable RevPAR increased approximately 49% versus 2022. For the month of February, comparable RevPAR increased 30% versus February, 19% versus March. So just to jump back over to the chart here, and we'll take a look at the earnings from last year. And the estimate was 318 million and the reported was 281. Now we know that there's a RevPAR increase here of 30% over the period in March 2022. So you would expect then if their revenue to be somewhat higher, right? Interesting stuff. Okay, so that's basically the summary in terms of what we're looking at here. There's a few other details. After the first quarter results are finalized, the company anticipates that 40% of its hotels will remain in cash traps under their respective loans, compared to 79% at the end of the fourth quarter 2022. And what this enables them to do is actually to reinstate their preferential share dividend. Now they're not doing it for the common class share; they're doing it for the preferential shares. It's not on this news article; it's just other news from elsewhere. So if you were to search aht.pi or something like that, you'll see their preferential shares with the dividend. They cost around about $16 currently, and So that's a positive aspect of what they've got going on here. The cash trap thing, what that means is that while the hotels are still generating revenue, that revenue needs to be sequestered in order to pay the loans down. It's just an agreement that they have with their creditors, whereby they won't take that money and spend it on CapEx, which is capital expenditure, which is whenever a hotel renovates, essentially. So they're not going in and painting the bedroom walls and changing the mattresses out and, installing new flat screen TVs and whatever in the hotels where we've got these cash traps. They're not able to do that willy-nilly, but that's kind of like the obvious thing, and they do need to maintain that whenever their hotels demand it, because time goes by and you do have, these are luxury hotels. So what's ended up happening is they've had capital expenditure which has been needed to happen when they haven't necessarily had the additional cash flows for the business to be able to do that, because the cash traps are in place on the hotels, stopping them from having that additional liquidity, which has then resulted in them having to do things like raise extra financing through selling more preferential shares. Now, the rate that they were able to give was preferential to the company too, as compared to refinancing the loans, which would have incurred a higher interest rate. So it was kind of like a win-win all round, forced by negative situation in the markets. So this is a positive thing, okay? And what I'm trying to do here, really, other than kind of shill some stock, I'm not really interested in trying to tell anybody to trade. None of what I do on this show is financial advice. I'm not your financial advisor. Always seek and do your own research. But I'm showing you how you can go about doing some research. It doesn't need to be an incredibly deep dive. I'm just talking about the structure in the market, the structure of the pricing, looking at that way that the markets came down, priced in some negativity, then rebounded up the way, consolidated for a period of time in anticipation of earnings coming out, and they're coming out next week. So I would like to see on AHT able to rise up. Now, the bear trends involve lower highs and lower lows. And one of the things about a bear trend is whenever you're putting in lower highs and lower lows is that by virtue of the fact that the previous high was a lower high, that it gives you an easier opportunity. And I know that I'm kind of, forcing this point a little bit here, but it's true that it gives you it's easier on an absolute terms basis for the price to beat its prior high than it was last time. So last time when we were in this situation, looking at what would have been kind of negative earnings really at the time as well, they were positive overall, but it got that red thing down there, and there was a lot of positive things in them, but they were still quite negative, which meant that the Bazingas and the Seeking Alphas and the Market Watch and the Wall Street journals of the world that write about these things are like, still got lots of headwinds against AHT stock. We give it a hold or sell rating, and we're thinking blah blah blah, and that when you get positive news in what could potentially be a more buoyant market than it had been previously, then that can have a better effect, where you're looking at it and saying, well, is this a worthy investment versus just buying gilts, or that's what the UK calls them, bonds, which you have in America. So a big investment company coming along and thinking, where are we going to generate returns from? Well, if they were to buy some stock, which was relatively low priced, that's going to also give them a return potentially in the future, then that would be a positive thing. But as an investment trust, AHT has been one of the ones which hasn't paid a dividend on its common stock. So what we really need to see happen is for the hotels to get out of being in cash traps so that they get a bit of revenue and can start to look towards being able to not only pay down its loans, but be able to pay some dividend in the future. So I think we're probably still quite a way away from having the common stock have a dividend paid on it. But I'm just kind of introducing you some ideas, and you can apply this to other things that you look at as well in markets. We say that market structure wise, we came down to what could be anticipated as a low here, pushing below where it would have pushed a lot of people out of the market, giving liquidity to people who might want to increase their positions. So what you've seen over the last few months is the likes of BlackRock increase their position in this particular real estate investment trust. back up here, where are we at currently? We're at that red line, which lines up nicely with the previous low in terms of this downward trend. So if we're to push above that, we could look towards highs again, and that could be $4.34, $5.22. But then the sort of this question at $6.57 and coming up towards $7 really starts to then let you ask another question at the same time of, would we be able to put in a high which is higher than a previous lower high, which would be a very different scenario to be in. Now, do I anticipate that happening in terms of, am I here telling you it's going to happen? Well, I'm not your financial advisor. I'm not a financial advisor. I'm not giving out financial advice, but I am saying that there is the opportunity for this stock to start to seek towards the positive trend, where then in its subsequent earnings, when it comes back and says like the hotels out of cash traps has moved down, because what we'll be looking at is Q2, and Q2 means that we're coming into summertime where you've got more holiday bookings on hotels. It's like it's better than the January and February and March months of the year typically, or April, May and June for hotels in the leisure industry. And they might be able to say, oh, all our hotels are out of cash traps. We're able to, pay off perhaps pay down some of their debt, perhaps reduce the terms, or renegotiate something, or come in and provide some fundamental aspect of the business having improved. And that's all I'm really kind of painting the picture towards, because this is in an area, obviously it's very low in the price, broadly speaking, and it's extremely high risk if anybody were to be trading this thing or investing in this company. But it's at this time where you're looking at that sort of extremely high risk, but the rewards could be partly greater than if they were to happen after the news is already out there and everybody already knows about it. So that's why I was showing you this. This is kind of a look behind the curtains that the company's kind of given everybody by showing them in advance of their earnings coming out. The hotel company expects to be out of cash traps after the hotels that our company expects to be out of cash traps after the first quarter generated approximately 70% of the company's full year 2022 hotel earnings before interest, tax, dividends, and all of that. So what we're looking at here is that Q1 has actually generated 70% of 2022's revenue, and things like that in an earnings call sound absolutely fantastic. It's music to the ears of potential investors, and that's where we are with that.